Hi, my name is Roger Schlitter. This video is actually about starting a business with no borrowing or no bank loan. And actually this came up in one of the viewers of the videos put in the comment section and actually said, now, what if I don't want to borrow? What if I want to, try to do it in cash? And that's kind of how this came about. So anyway, I'm going to do my best to kind of show you what information you would need, because some of the cash has got to come from somewhere. I mean, you can't just create things out of thin air. Some of it you can, but there's a lot of things you cannot. So anyway, this is starting a business with no borrowing or no bank loan. Starting a business with no borrowing or no bank loan, this can be a reality, but the business owner really needs to know where the money is coming from to open the business. You are going to need some money. The business owner could have the money in savings in the bank. Good for him or her. That's kind of unusual. You'd have enough money to do that and enough money to pay your bills and put food on the table. Most people have some savings, but usually the potential business owner may not have enough money to start the business and get the business to the point where it's making a profit, where it's actually returning money for him that he can use either for salary or for whatever he wants or she wants. There are actually three things you need to address when starting a business with your own money. The first one would be the business owner needs to assess an accurate total project cost for the business, to start the business and to start generating cash flow or profit in the business. Operations. Where's the company going to be located? Does the company have ongoing expenses in that location? Rent or mortgage, and then utilities, electric, gas, water, sewer, trash, etc. The operations part is very important. Business processing costs, employee wages, inventory purchases, cost of goods sold expenses, office supplies. I mean, all of these business processing costs are going to come up, and you're going to need to address them. Marketing costs, advertising. How are you going to do your advertising? Mailings, web ads, salespeople, call them up on the telephone. I mean, there's just so many ways you can do marketing, but you really want to know what that cost is going to be before you start that business. And then what is the cash cycle of the business? How long is it going to take you to go from sales to profit? From inputs to cash left over. Is it going to take you one day to do that? 1 week? 1 month? Many months? A whole year? There's a lot to be said for that cash cycle, because, and I covered this in another video too, and it's really because it really tells you, how quickly your money can go from inputs, and then you sell it to the customer and the customer pays, and then you got money left over. And then how many times you're going to do this before it's actually positive money and you're not losing money. And maybe that's from the get-go. That would be great. Anyway, number two, the business must create a cash flow for a minimum of the first year to see how long it will take for earnings to work their way through the system. And this kind of is like your, also kind of like your cash cycle, but it's a little different. You really want to create a cash flow, cash in, cash out. Cash left over becomes your cash the next month, cash in, and then other cash that comes in as sales, and then expenses, and you keep doing that. And some businesses are losing money for the first couple of years. Some businesses make money, very quickly. So the business owner must create a cash flow for a minimum of the first year to see how long it will take, the earnings to kind of work their way through the system. We're talking about the sales or cash inputs, and then the expenses, to equal cash left at the end of the period, either the end of the period, month, quarter, or year. So anyway, how good or bad is your cash cycle? And to give you an example, restaurants seem to have what we sometimes call a negative cash cycle. And this means that sales can happen on day one when you open the business. If you are lucky, you will start serving food and getting paid on day one. Now, the cost of the business, our employees, wait a minute, they get paid every 2 weeks or so. Theoretically, you can pay them with the sales of food at the restaurant. And there's other things too, like machinery and furniture fixtures. Many times they can be purchased with the bill coming later or in installments over time. Raw food, paper supplies, and other supplies that are needed can be purchased, with the bill being paid, a lot of times in a month or at the end of the quarter. And it does depend. I mean, if your business does not pay on time, your business may be put on COD, cash on delivery, which is not good. But sometimes brand new businesses are cash on delivery if that supplier or distributor doesn't trust you or doesn't know if you're going to make it. Then he wants to get his money quickly and not be left holding the bag later on. Rent or mortgage payments can also be made in arrears. The building may offer you free rent and offer to rent the space. Now, sometimes this isn't the most desirable space. If it was, people, want that space and will pay extra for it. But, all expenses in the building are usually paid in arrears too, after the business is benefited. But really that rent or mortgage, that rent, a lot of times if you have a building that the person's been trying to rent out for a while, you could say, hey, how about give me a few months free rent? He may give you, a few months, he may give you 6 months. I mean, you don't know if you don't ask. The cash cycle will really dictate when you need cash and when your cash is returned to you as sales and eventually income or actual cash in the bank. You're always going to look for ways that your product or service, you can use that product or service now and pay for it later. Many times a salesperson really wants to make that sale, whether it be equipment, whether it be furniture, whether it be renovation, contractor, whether it be whatever. Sometimes they want to make that sale and will help you out if it means making the sale. Always see if a way can be made for paying it later, even like a month later, or paying installments, or pay in some way like that to make it a little bit better. Basically, in summary, number one, you got to know what your costs are that you need to open that business. You need to know what costs you cannot avoid paying, and the ones that you absolutely need cash. Some costs you're absolutely going to need cash. Some you may not. Some you may be able to go ahead and defer or delay. Defer or delay until your business is generating income or cash that can go to you. That's what you really want. Number two, create a cash flow projection for your business, especially in its first years and probably the second year. This exercise will earmark when you need cash and when you generate excess cash. It's very important to know that when you're, if you're not going to make it for 3 months, then you got to find a way to make it through that 3 months. Then number three, know the cash cycle of your business, from sales income to expenses, outgo to ending cash, ending income or cash. How long it takes your business to generate income from sales. And this will be different on everybody's business. Now, take for an example the restaurant. It's got some people may say that a lot of restaurants have a negative cash flow cycle. When you're basically in the restaurant, you're getting paid up front. When you open and you sell food, you're getting paid. Now, you're basically using other people's money because you haven't paid your employees for that period. You haven't, a lot of times you haven't even paid for product. You're going to pay for it at the end of the month or at the end of the quarter or something. So a lot of times you can really use other people's money. And whenever you can use other people's money, that is great, because that means that delays that amount of time that you have to use your money, and it increases the time that you can actually make a profit. One other business that I ran into as a banker that really is a negative cash flow cycle. I mean, this one absolutely does, is basically a trash company. Those trash trucks that come down and pick up your trash. Now, they don't come to you and say, hey man, I'm going to pick up your trash for like a month. Can you pay me at the end of the month? No. They say, you need to pay for a month or more of my service before I'm even going to pick it up. So basically they're paid first and then they pick up your trash. That's a heck of a business. I mean, think about it. How many people have a job where, go to the boss and say, hey, I've got a great idea for you. Pay me first and then I'll do the work. I don't think many of them are going to go for that. Matter of fact, I don't think any of them are going to go for that. So anyway, and positive cash flow cycle, like a manufacturer that'd be using your own dollars. They have a longer cash cycle. And you need to know that to know how much cash you need, especially if you're not going to get any bank loans. You really need to know how fast your cash is going to go or where you're going to get it. And then, ultimately, you know, even businesses that don't borrow money, and there are businesses that don't borrow money, sometimes have to, their sales, their growth is at a lower point because obviously, if you're going to grow, you sometimes need money to buy things or, to have different locations or whatever, or to expand your sales. If you just do it, the money you have, which you can do, but if you just use the money you have, a lot of times you're limiting your growth, and which sometimes can be a good thing because some people grow too fast and then they run into problems. So growing very slowly or maybe very really small steps is sometimes a very good thing. So I hope this gave you some ways that you can think about starting a business without a loan or without a bank loan. Be nice if you could. Usually businesses that are started like that, like I said, either use other people's money or, your service or your actual work is your product, to where you're not really buying anything. You're just like an accountant. You're just saying, hey man, I can do your figures for you at the end of the month and then you pay me. Something like that is your knowledge that you're actually selling. Anyway, so any type of business like that, consulting or something, which probably can be done without a bank loan. So anyway, I hope you subscribe if you like this kind of content, and ring the notifications bell if you want to know of future videos that are coming out. If you did take away anything on this, I hope you hit the like button. So anyway, my name is Roger Schlueter, and I will see you in the next video. Thanks.